Welcome to my channel Accounts Accuracy. Let us study admission of a partner. Here we are going to study about admission of a partner and what are the steps taken after the entry of a new partner in a firm. Now suppose if a new partner gets entered into a firm, at that time suppose there are two old partners and they are giving the entry to the third partner in the firm, then before his arrival they just share the changes which take place in the value of assets and liabilities among themselves, because they never wish to benefit the new partner and nor suffer with the changes in the value of assets and liabilities till date. So that is why revaluation of assets and liabilities are done. Now why it is done? Because all the efforts are taken by the old partners in order to bring the company to that extent. So why would they allow the new partner to enjoy any benefit for what they have actually taken the pain? So that is why before his arrival they just revalue the assets and liabilities. So if any decrease in value of asset is found, that is debited in the revaluation account. On the other hand, if any increase in the value of asset is found, that gets credited in revaluation account. The vice versa is done in case of liabilities. If any increase in the value of liabilities are found, that is debited, and if any decrease in the value of liabilities are found, those are credited in revaluation account. Now logically why it is done? Because decrease in the value of asset is basically loss for the company, and as per golden rule you know that all losses are debited. In the same way, if any increase is found, as per the golden rule, increase in the incomes and gains are credited. So here, due to that, the decrease in value of assets are written at debit side of revaluation account and increase in the value of assets are written at credit side of revaluation account. And the same applies on liabilities. If the liabilities increases, as per modern rule, we debit, and if liabilities decrease, we credit. So if you apply modern rule or golden rule, according to that you do the same. Next to that, if any unrecorded liabilities or assets are found, accordingly we just debit and credit. In the balance sheet, you know that liabilities we write at debit side. So any unrecorded liabilities are discovered, then they are debited in revaluation account too. And in balance sheet, as you write assets at credit side, so that is why if any unrecorded asset is found, that we credit in revaluation account. Next to that, we have partners capital account, that is remuneration. If any remuneration is required to be paid to any partner, then that also is debited, because this is an expense of the company and all expenses should be debited. On the other hand, after that, if any other expenses, that is revaluation expense, takes place, that again gets debited to cash we write, because all expenses are debited. So that is also debited to revaluation account. And at last we do the balancing of revaluation account. It may be loss, which would be written at credit side and get divided among the old partners in the old ratio. If balancing figure comes as gain, then that gets recorded at debit side and the profit gets divided into the partners in the old ratio. And if gain is there, then that will diagonally be posted to the credit side of partners capital account. Let's see how. Here is the question which you will get. For that you get some adjustments, and these adjustments are telling us that how much changes in assets and liabilities has taken place, and accordingly we make the revaluation account. But before that, I would like to clarify few things to you. Here are few important things which you should know about the language in adjustment. If you will be provided machinery reduced by 25% or machinery reduced to 25%, both mean same. That means there is reduction in the machinery, but it is written by and to. So means you have to understand that it's the same thing. Again, all the debtors are good means provision for doubtful debt is not required and hence existing provision of doubtful debt is credited to revaluation account. That means this amount which was kept for overcoming the loss occurrence due to debtors will remain unused, and that is why that will be treated as profit for the company and it will be credited in the revaluation account. Next to that, if you get bad debt and provision for doubtful debt, then you need to follow these steps. First of all, you will be required to deduct the bad debt value from the total debtors provided. And you very well know who are debtors. Debtors are those who owe money to the company. Now, if some of the debtors are found bad, that means they fail to pay the money, that becomes loss of the company, and that's why the amount of total debtors will be kept as 10,000. If any provision exists, then you deduct that provision from the debtors. Now, if the firm creates provision, then in that case, that provision will be created on the actual debtors, which will be calculated after deduction of bad debt. So on actual debtors, that value of doubtful debt will be created. Here it's been given 20% was required to be created, then 20% of 10,000 is 2,000 and you will create provision 2,000 on this 10,000, not on 12,000. And after that, the 8,000 will be the value of debtors. And any excess of bad debt over old provision for doubtful debt is debited to revaluation account. Suppose if any old provision would have been there, like 4,000, so from 4,000, this 2,000 would have been reduced and rest 2,000 would have been debited to revaluation account. That could be more clear when you will do the sum. Let us try this sum. In this sum, it's been given that C shall get 1/5 share in the profit. That means A and B were the old partners and C got entry. Now this C has got entry at 1/5 share and he brought 2 lakh as capital and 50,000 as goodwill. Here what we are finding that provision for doubtful debt is to be brought up to 5% on debtors. Debtors are 2 lakh and 5% of this 2 lakh would be 10 lakh. So what we are noticing that there is increase in the value of liability. As the liability value is increasing, it should be debited to revaluation account. If the value of liability increases, we debit. So this 5,000 will be debited to revaluation account. Again, we have machinery is to be reduced by 20,000. The machinery value was 1,80,000. Now it has become 1,60,000 because that there is decrease in the value of machinery. So this 20,000 will be loss for the company and all the losses should be debited. Now we have furniture reduced by 12.5%. So 12.5% of 1 lakh is 12,500. So this will be again shown at the debit side because it's again loss for the company. Next adjustment which is given is stock to be valued at 2,30,000. So this stock value has got increased by 30,000. The earlier value of stock in the balance sheet was 2 lakh and now it has become 2,30,000. So there is increase in 30,000. So this increase in the value of stock, that is asset, revaluation account at credit side. Then we have value of land and building which got increased by 8 lakh, increased to 8,82,000. Earlier the value was 7,35,000 and now the value is 8,82,000. So difference between 8,82,000 and 7,35,000 is 1,47,000. So there is again an increase with 1,47,000 which will be reflected at the credit side of revaluation account. Then we have investments of 20,000 which were not recorded in books of accounts are to be recorded. So this is unrecorded asset, and as I told you, unrecorded asset is again the amount which will be shown at credit side because in balance sheet also it is shown at credit side, that is asset side. And also you can remember that this is a profit for the company. Somehow it will be additional value in the asset. So that is why it will be reflected at credit side of revaluation account. Then after posting all the changes in the value of stock and liabilities, we will calculate the balancing figure. here it may come to credit side or debit side. If it is coming at debit side, it will be profit. If it will come to credit side, it will be loss. Here the balancing figure is at debit side, which is profit. So this profit will be divided among the old partners in the old ratio. And in the question it was given that old partners, that is A and B, were sharing the profit equally. This will equally get divided among A and B. And then it will be posted to partners capital account. But before that, you should know what is the format of partners capital account. So this is the format of partners capital account. The three partners capital account can be made all together. Now this profit will be transferred to partners capital account diagonally. If it is profit, it's been transferred to from debit side to credit side. If it would have been loss, then you would have transferred from credit side to debit side, but here it's been transferred to credit side. Then we have buy balance brought down, 6 lakh and 4 lakh. This is provided here in the balance sheet, 6 lakh and 4 lakh. This is the capital value which is given in the balance sheet. It will be shown in the partners capital account as buy balance carried down. So this is the balance of capital which will be shown in the A's and B's column, and again C's column it will be 2 lakh because C brought 2 lakh as capital, and he also brought 50,000 as premium for goodwill. So this premium for goodwill will be divided. So this premium of 50,000 will be divided among A and B as 25,000 in the sacrificing ratio, and capital will be 6 lakh, 4 lakh of A and B, which will be shown in the partners capital account. C also brought 2 lakh as capital, that will also be shown in C's column, and this 25,000 will be shown as will be provided to A and B because this is the premium for goodwill, which 50,000 which was brought in by the C new partner, and this will be divided among A and B in the sacrificing ratio. Then again it will be reflected at debit side. Why? Because they have withdrawn the same value of premium for goodwill. It's not being kept, but it's being withdrawn by A and B in the withdrawn by A and B. Then we will calculate the balancing figure of the capitals of the three partners. You can see here earlier value was 6 lakh and 4 lakh, but after admission of C the changes took place and the capital value got changed, and it has become 6,79,000 for A and 4,79,750 for B, and C brought 2 lakh. So this is the balancing figure of the capitals of three partners. New balance sheet is made with the new values of assets and liabilities, because you have noticed that in question in the adjustment the changes in the values of assets and liabilities are provided. So accordingly you need to change the values in the new balance sheet. Cash in hand has become 4,70,000. Earlier the cash value was only 2,70,000. Again you noticed that this 2 lakh was brought in by the new partner, so the value of cash has become 4,70,000. Now debtors, there was increase in the provision value by 5%. So that is why instead of 5,000 now you are supposed to deduct 10,000 from the total debtors, because extra 5% of provision was created. Then we have stock value and your machinery value. As you can see here that stock value was increased by 30,000. So you are going to add the value of stock of 30,000 in the previous value of stock, that is 2 lakh plus 30,000. So you will write here 2,30,000 the new value of stock. Your furniture value had decreased by 12,500. So you are going to reduce the value of furniture by 12,500. So your new value of furniture will become 87,500. The earlier value of furniture in the old balance sheet was 1 lakh. But due to the reduction in the value of furniture, we are going to reduce it and mention the new value, that is 87,500. Machinery value was also reduced by 20,000. The earlier value of machine was 1,80,000, but now as the value got reduced by 20,000, so it will be 1,60,000. You can see here land and building value was increased by 1,47,000. So this 1,47,000 will be added to the old value of land and building which was given in the balance sheet, that is 7,35,000. 8,82,000 is the increased value of land and building, and this will only be recorded in the new balance sheet. Again, investment was the unrecorded asset, hence it will be shown in new balance sheet at asset side. Your creditors were 5 lakh and bills payable was 1,50,000, and your outstanding expenses were 30,000. So these three, there is no change, simply it will be mentioned what it is given in the old balance sheet, as there is no change in the value of creditors, bills payable and outstanding expenses. So same value will be copied down, and then the new capital values of the old partners will be shown in the balance sheet. You can see here these are the three balances of capital of the partners. These balances will be shown in the balance sheet, and total amount of all the three partners capital value will be written in final column. Now what you will notice, your balance sheet will get matched. If it's matching, that means you have done the sum correctly. Remember children, it's too easy, it's not that complicated. Simply you have to make revaluation account, and all the increase in value of assets will be written at this side, and decrease in the value of asset will be written at debit side. If there is increase in the value of liability, that will be written at debit side, and if there is decrease in the value of liability, that will be written at credit side. Unrecorded assets you will write at credit side. Balance sheet as we record at credit side, so that is why in revaluation account also we write at unrecorded asset at credit side and unrecorded liability at debit side. After that you calculate, and the balancing figure could either come loss or gain. If loss, that will be recorded at credit side diagonally. If there is profit, that will be recorded at credit side of partners capital account diagonally. And then the amount brought in by the new partner would be written in new partners column at credit side, and the balances which would be provided in the old balance sheet of the old partners would be written in their columns. And then premium for goodwill is recorded. If it is withdrawn, that will also be shown at credit side. If it is not withdrawn, then simply we write premium for goodwill. And then the balancing of partners capital account is done, and that gets recorded in balance sheet at the new value of capital gets recorded in the new balance sheet. And cash in hand value also changes, because the amount of cash which comes in business because of the admission of new partner increases the cash value, and then the changed value of assets and liabilities are reflected in the new balance sheet. This is all for today. I hope you like my video. Please don't forget to subscribe my channel and hit the big fat like button. Thanks for watching.